We'll be going over WTI crude oil. In this video, we'll be going over the day-by-day probability model, the technical performance of each model, how we find the models, and the day-by-day forecast for WTI crude oil. So back to the technical analysis. Today we're down 5.5% on the 1 hour chart. We were overbought over RSI yesterday, and now we're approaching to negative MACD. We're now resting on the 50 moving average, and that may break very soon. As for the 4 hour chart, we may close even further below the 9 moving average and possibly rest on the 200 moving average on the 4 hour chart. We also start to see a divergence on the 4 hour MACD. And as for the daily chart, if we expand out further, we are encountering resistance on the 50-day moving average, this yellow line. And at the moment, the uptrend is still quite healthy. We do not see a divergence on the daily MACD. So we may see a possible retracement and find possible support in the meantime. The next possible support that I see will be around where we saw previous support levels that dated back to March 30th, around a price of $19.60. That level also coincides with the 18-day moving average and the 9-day moving average, the purple and blue line respectively. So if we do manage to fall down lower, that price movement to the downside or to back to support level will be roughly around, I would say, 14.7% to the downside. As for resistance, the next resistance that I see, we made a resistance back in April 3rd around a price of $29.10. So if we were to move up higher and breach above the 50-day moving average, that price movement is roughly around 23.7% to the upside to the next resistance. Now let's examine the day-by-day probability model. Again, these models are now available in the link below, so do check it out. So as the days progress to the 7th day, we have a 17% chance for WTI crude oil to climb higher between 0 to 16%. On the extreme case, we have a 17% chance for WTI crude oil to climb between 16 to 32%. And on the other hand, we have a 50% chance for WTI crude oil to fall between 0 and negative 16%. And on the other hand, extreme case, we have a 17% chance for WTI crude oil to fall between negative 16% to negative 32%. So let's examine the day-by-day probability or day-by-day forecast for WTI crude oil. So 1 day out will be a Thursday and 2 days out will be a Friday. So we 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is best matched to the current trend. Right here we have the current trend. The spike in price was due to the reverse split on USO. So it was a 1:8 ratio split, and the trend overlapping it is the best match, and that dates back to October 7, 2008 to January 2nd, 2009. So right here we have our current trend, and below is a trend that I believe is the best match. So let's compare the two trends. So we start off at the middle Bollinger Band, and then we slowly slide along the bottom Bollinger Band, revert back to the mean to the middle Bollinger Band, and then once again dip lower, and then we see an attempt to meet at the middle Bollinger Band. So now the trend in question, so we start off at the middle Bollinger Band, then we proceeded to slide lower to the bottom Bollinger Band, seeing a slight attempt at the middle Bollinger Band, and then once more slide once more further, and then at this instance we do see it approach above the middle Bollinger Band. Right now it's about a bit tough to see, so let me change. So at this instance we are above the middle Bollinger Band. Compare that to the current trend, we are not. So do keep that in mind. This trend is a bit more forward ahead than the current trend, so do keep that in mind. So what we have here is 1, 2, 3, 4, 5 points. We also have 1, 2, 3, 4, 5 points. So there's reason to believe that the trends and patterns are the same, the outcome and forecast. should be fairly same. So the model that we just examined was October 7, 2008 to January 2nd, 2009. Back then, WTI crude oil was down roughly around 12.3%. So if we examine the day-by-day probability model, that coincides with this standard deviation of 50% chance for between 0 to a negative 16%. And if we examine the technical performance, due to the reverse split, it's out of whack. So we'll just examine the trend in question. And the trend in question that we just found and examined, it was down roughly around 102% from monthly high, up 19% from monthly low, up 13% from 10 simple moving average, and up 5.5% from 20 simple moving average, and up negative 15% from 50 simple moving average. The reason why we see a slight difference in the, or dramatic difference in the technical performance was due to the reverse split on USO. Again, these models are now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.